Good morning. Good morning, it's Jonathan Barrett with Morning Debrief. It's the 10th of August and the current time is 7:42. Well, the volatility continues, there's no doubt about it. Minutes from the FOMC meeting last night were encouraging. Basically said that good old Ben would leave interest rates at their lowest level until mid-2012. That gave a sense of relief to the market, and of course we saw a rally of about 500 points. So quite encouraging there. The key we've got to work out now is whether or not that's a low, or whether it's just a continuing bear market where we get these aberrations that everything's all right, and then things start to come lower. What I tend to think is that commodities, because they've taken a big hit, that this is the first stage in a recovery, because asset prices have realigned themselves, and to me that's a positive thing. The Dow's come back to more realistic levels. In the Barrett's Bulletin, we actually did mention that it could come down below that 9,000, 9,700. We came shy of that, but that's something which we've talked about at length as well. And so maybe we are on the road to recovery. I guess we just have to wait and see. Also good to see oil a lot lower. Remember trying to push oil through the economy at $100 a barrel and then trying to put it through at 78 or 80, it's a lot easier. And that obviously constitutes good profits, corporate earnings, if you lower the price of primary inputs. Okay, so let's have a look. Let's have a quick snapshot. Let's go to Bloomberg, of course. Stocks saw most in 2 years. S&P up 4.8%. Pretty positive news there. China may delay rate increases until 2012. Interesting when the CPI and PPI numbers came out yesterday. Basically, in my mind, interesting there. They're a little bit higher than expected, but let's see. I don't know why they said that anyway. It's just a rumour. I don't think they will. Having a look at some of the other information, and I guess the most other bits and pieces. I guess productivity in the US falls for second straight quarter. We know German June exports drop. I guess that's probably the main thing there. But I guess when you look at it, when you really look at it, perhaps we have found a bit of a bounce there, and perhaps we're on the road to some form of recovery. Let's keep an eye, just a quick overview as to where the world is. As we mentioned, the Dow was up 3.98%, S&P was up 4.74%, Nasdaq up a whopping 5.29%. Good to see green across the boards. Top 50 now, this is interesting. The market did not receive this data. The UK markets were actually closed. The FTSE was up sort of 95, the CAC was up 51. So you might see a bit of a lift today. We also see a lift, obviously, today in our markets. Local market on the futures are up 114, 4,115. For those who look at it, we should be positive as well. Keep a little bit of an eye too on some of the stocks. One which David has mentioned is the Caltex, good dividend stock there as well, so keep an eye on that. Okay, let's have a quick look at some of the commodities now. I've got crude up on the chart here for a reason. Obviously, you know, with any form of a continued slowdown, down she comes. We did mention that anything below 85 to 80 was cheap. We actually weighed into the market yesterday at 78.60, and quite happy on that. Sort of when you look at the sort of round and abouts, right, dips can be well bought back to 80. And obviously a break below 76 is where we're wrong. But when you're on the scheme of things, when you look at it, we've got a sort of a low in place, good support here at 79.70. I'd expect the market to be sideways to bullish from here, maybe even test back through that 80, 85, 86 level. But let's see how that unfolds. Okay, that's crude. Copper, obviously a bit of a bounce back, even though we saw it quite a large sell-off. Look, once again, all these commodities have found a little bit. We probably expect sideways price action for a while before we set more of a trend as to what is happening there. Gold is the scary one. Obviously, lots of volatility. Just have a look at this hourly chart. I mean, it's phenomenal when you see the ranges that it's traded. You know, here we are. 80's been the high, 22's been the low, 23, and then all of a sudden we bounce from 23 back to 77. Anyone's game, but I think if we get a daily close below the recent high, I think my expectations are that she comes lower. There is this expectation of divergence, which we've talked about in the market. We talked about it in Barrett's Pearl. so that if in fact we get a daily close, there is that good divergence there which will form, but you need confirmation of that in order to trade it. Okay, silver's been the dog. I mean, we've always looked at silver as the underdog, but the fact that it hasn't really moved does worry me. You know, I think if anything, it takes out 40 or 42 on the top side, up she goes, but it's really not performing, so I'm more inclined just to stick low there and stick aside. That actually does look quite a weak market. Okay, dollar index. Dollar index, obviously, with what's happened, weak, bouncing around the lower end. Look, I think that 73, look, as we know, the dollar index has been there down for a while, so there's not much we can really look at it, except that probably expect a little bit more weakness towards that market. Looking at the SPY, a reasonable bounce there. Well, it's certainly cleared out, everyone. There's no doubt about it. 2-3 days of just very negative price action. Let's try and crunch up a little bit more. Well, I think the market will say, let's try and fill that gap. Okay, back to 4,200. See what happens. Momentum indicators have bounded, rounded. This is an area which it's come shy of. We can just move that up a fraction there. There you go. Well, it's pretty close to it. So if anything there, I think that's a low of some importance in place. So, you know, if you're not long, I think you're probably way into the market. The market will try and certainly be up today. Okay, some of the other commodities. Natural gas is just a complete dog, as we know. You know, it's sort of one of those things which just can't seem to get up. There it is there. Down to 4, just continues. Momentum indicators are on the downside. Let's see if we get a lift over the next couple of days back through some of these areas which we're looking for. Can't see why it shouldn't do that. Okay, that's pretty much about it. I think we've covered most of the markets. Oh, Aussie dollar. Now here's a volatile day. There it is down to below parity, and we're back up at just under 104. Golden opportunity there went begging, and you know, I think dips now will be supported back to that anywhere around that 101, 102 for people to look at. So exceptionally volatile. Okay, on the economic calendar, what have we got? We had FMC meeting last night, roundabout way. That was pretty good. The market certainly took it that way. Westpac Consumer Confidence today in Australia. Bit of IP data over in Europe. Bank of England minutes, inflation report, sorry. Nothing in wholesale. We've got a bit of data out in Japan. So not a lot to hang your hat on, but it's probably nice that we get a little bit of a slow market so we can then see exactly how things will unfold. By way of trades, what have we got on at the moment? Well, we're in the oil market. We picked up yesterday, so quite happy about that. Gold, we've had a couple of goes at it here and there. Let's see what happens. I think the volatility's killed us there. BHP, we were short. We actually covered the short and went long. We got a long, only a very small position because I've cut back on a lot of trading just due to the volatility, and it's quite hard. We're looking at Caltex, I think, because I think that's not a bad trade. And when I look at everything else, really it's a bit of a shakeout across the board. But anyway, let's see. That's all part of trading. Let's see how it all unfolds. That's it from me. Have a great day. We'll talk to you later. Bye for now.